Welcome to the channel. This episode, we'll look back at portfolio performance from last week. Things are recovering nicely from the market's reaction to the Teladoc merger. And we'll look at maybe adding a new stock to the portfolio. I know followers can agree we could benefit from some more diversification. Let's jump into it. Welcome to Get Invested, where we talk about money, discipline, and business strategy. In this series, I'm demonstrating how I build market-beating stock portfolios using a growth-focused mindset, starting with just $100. I invested $100 on July 1st of this year, and I'm continuing to invest another $100 each week, every Tuesday, here on YouTube. I share my trades for you to see, with a little bit of my thinking and rationale along the way. Direct links to the portfolio can be found in the video description below. If any of that sounds interesting to you, hit that like and subscribe button. It's how you tell the YouTube algorithm this is content worth sharing. Let's get started. As it stands, our portfolio is currently at $747.28. That's a gain of $47.40 on our $700 invested, giving us a money-weighted return of almost 12%. Those of you that have been following along know that this is an impressive improvement over last week when we were overall down by 2%. I mean, look at this. Just last week, we saw a swing of over $52. So what was behind that? Well, first, we can see there's a huge jump in our automotive and EV companies. Tesla announced a 5-to-1 stock split right after we invested another $50 into them. Lucky timing on our part, but that's one of the reasons we build our positions over time. We saw a 30% return from them in just 1 week. That's huge. Also, Livongo and Teladoc, remember these two merged last week? Well, after the merger, they were down 20%. We've already seen them climb back, on average about 8% each. I'm extremely bullish on virtual healthcare, and I think this juggernaut of a company, the merger between Teladoc and Livongo, is a great buying opportunity. 5 years from now, I might be looking back on this moment wishing I had bought more of it last episode. Then that takes us to our consumer companies. Now, these two have been relatively quiet. Netflix missed their earnings right after we purchased it, so they've been down for a while now. And on the other hand, McCormick, the food company, has actually been doing quite well as the United States waffles back and forth on their coronavirus recovery. I think this consumer section is going to be a great area to add a few more companies, especially now that we're going through earnings and we're seeing how companies are reacting to the recovery. In that regard, a space I see future growth potential in is at-home fitness. So the company we're going to talk about today is Peloton. I'm sure you've seen the commercials and social posts about its products. If you haven't, Peloton makes web-connected fitness equipment and streaming content. The company has been steadily building momentum since 2017, but it simply exploded in 2020 when the US went on lockdown as a result of the COVID-19 pandemic. Peloton has really been the growth story of the fitness industry these last few months. So does it make sense as an investment for us? Peloton really succeeded in making at-home spin classes cool. The bikes are pretty well designed when compared to other spin bikes, the classes are really engaging, and the platform does a good job of building a community and competition. I know people that own and rave about their bikes. I've done a few classes myself. The product really does offer that gym-like experience at home, complete with a workout leader and classmates of other Peloton and treadmill bike owners. For those times towards the end of a workout when you're tired and distracted, that sense of community really does keep you engaged with the experience in a unique way. Second, at-home exercise equipment saves you time. You don't have to drive to and from the gym, then wait for the equipment to become available. A workout can be started and finished the moment you roll out of your bed. Now, I don't own a Peloton, but I also own an exercise bike at home, and I can say it really does make a difference being able to just throw on your gear and hop on the bike within 2 minutes. This combination of engagement and instant access has translated into equipment sales of $420 million during this most recent quarter. And subscription revenue is almost $100 million. Peloton's leaders feel that subscriber growth and subscription revenue are going to continue into the current quarter, which is going to get reported on September 10th. So we have a company attacking a large industry with an engaging tech-enabled product that is beginning to demonstrate its ability to scale in the marketplace. These are the types of companies we look for as we hunt for outperformance in the stocks we own. But there are a few things about Peloton that still has me wary. The fitness industry is fickle. I mean, historically, between 50 to 60% of paying members rarely, if ever, use their gyms. I think we all know that. And while Peloton addresses a bit of this, the gym is technically at your home. But research on activity trackers actually suggests that half of them stop being used within a matter of months. One could argue that fitness trackers are a lower barrier of entry than a $2,000 bike, and consumers aren't even consistently wearing those for more than a few weeks. Now, in my own experience, it's hard to stick to a workout routine without a broader training plan or long-term goal. It'll be interesting to see, on average, how active Peloton members continue to be. Another challenge that can slow their growth is their price point. These bikes start at a little over $2,000. The treadmills are $4,000. Now, there's a market for that type of high-end fitness equipment, but it's not a big one. The company is working on expanding their lower-cost options with a cheaper treadmill, maybe even a rowing machine. But this continues to lead me to think that they're misreading the market's appetite for these type of products. And as you move down that cost scale to cheaper offerings, you start pitting yourself against companies like Nautilus and Nordic Track. Not to mention the other at-home solutions like virtual biking on Zwift or Mirror. All it's going to take is a more engaging product to undercut Peloton's subscription price, and you'll see a rapid membership exodus. Another vulnerability they have is their lack of follow-on purchase. Once you own a Peloton bike, there isn't more equipment or future purchases you need to make with them. Only 3% of current members own a bike and treadmill, and I'm pretty sure most of those are gyms and hotels. So there isn't much overlap between their fitness audiences. My bottom line, I really like the market they're targeting. I think they have potential to build a moat for themselves, but it's just too early on for me to feel compelled to add them to our portfolio. The company has had some great success during lockdowns, and I'll be keeping an eye on how Wall Street reacts to their earnings report this September. Instead of Peloton, the company in the fitness space that I'm excited about is lululemon. The brand that practically invented athleisure has been having a moment during the pandemic. Consumers are trading their professional attire for the comfort of yoga pants and stretch-enabled shirts. While most retail businesses struggled during regional closures, Lululemon's online sales exploded. They're currently up 100% over the last year and outpaced the market recovery completely. What really caught my attention, though, was their recent purchase of Mirror, the company we talked about earlier. It's a web-enabled at-home mirror that gives you access to workout routines and personal training. The product doesn't limit you to a bike or a treadmill, catering to a broader fitness market. And if we imagine a future with fewer retail stores, Mirror would give Lululemon the clear edge to market its products to consumers at home. Imagine being able to swipe left or right on your outfits, displayed right on the bedroom mirror. Even if they aren't able to fully capitalize on the technology, I think they have a strong brand presence and a history of delivering exceptional results, which make it a much better investment than Peloton at this time. Let's talk about this week's trades. We said we're going to expand the consumer portion of our portfolio, so let's add Lululemon. I've already added it here to our pie. Let's pick up $50 worth of that one. That feels about right for this week. That's all set. So now we have another $50 to spend. Let's see, where do we want to put it? I'm still really bullish on Livongo and Teladoc. I'd like to own more of that company, and I'm going to just keep going. I want another $25 of that one. That's all set. And last but not least, for our last $25, let's see, who performed the least last week? We're going to expand consumer. We're picking up some more healthcare. I'm a little hesitant to invest more into our automotive and EV companies, Tesla and NIO. They are burning hot enough already. So let's invest in our technology group. That's Apple, Sea Limited, Zoom, Amazon, and Alphabet. I think those are all great companies. Never hurts to own more of. So let's buy another $25 of this portfolio. M1 will figure out exactly what the right proportions of which companies to buy are. That's why I love that site. So now let's look at our full recap. We have 7 trades queued up for tomorrow morning, $50 of Lululemon, $25 in Livongo, and $25 in our technology portfolio, which is comprised of Google, Amazon, Zoom, Sea Limited, and Apple. I think these are all great purchases. Happy to own more of these companies. Let's see how it turns out next week. If you found this video interesting, hit the like button. Also, feel free to share your thoughts in the comments. If you want to join us on this investing adventure, hit the subscribe button. We'd love to have you. Links to this episode's portfolio are in the description below. And if you want to get notified each time we add a new video or new stocks, make sure to hit that notification bell. Thanks a lot. Have a good week. Stay safe and get invested.